All right, so let's dive into this Dow Jones thing. It's been all over the news lately, right? Hitting its longest losing streak since like 1978. Yeah, 1978. And, you sent in this article from the Motley Fool. It's got this really catchy title. The stock market just did something it last did in 1978. History says this will happen next. So you got to figure out what that next is, right? But before we get all back to the future on this, maybe we should take a step back for a sec.
Yeah, absolutely. If we really want to understand what this losing streak means, we need to kind of, start with the basics. Like, what is the Dow Jones anyway, and how does it actually work?
Exactly. Can you give us that rundown? Like, for those of us who don't spend all day staring at stock tickers.
Sure thing. So think of the Dow Jones Industrial Average, or just the Dow for short. It's basically like a VIP club. 30 of the biggest, most well-established companies in the U.S., your blue-chip companies, household names, we're talking tech giants, healthcare heavyweights, financial powerhouses, all that. Though it's not the entire market, got to be clear about that. Like utilities and real estate, they don't get an invite to this party.
Interesting. So it's like a snapshot of the market, but not the whole picture.
Exactly. Now, here's where the Dow gets a little different from other indexes, like your S&P 500, for example. The Dow is what's called price-weighted.
Price-weighted.
Yeah, basically it means the companies with higher stock prices, they get more say in how the whole index moves. So a company like, let's say, Goldman Sachs, with a high stock price, it's going to have a bigger impact than, say, McDonald's, even though, they're both big names.
So the Dow's kind of sensitive to those high rollers then.
You could say that, yeah. And, that can be good or bad, depends on the market.
Okay, I'm following you. So let's get back to this 9-day losing streak, ending December 17th. You said it's unusual, but how unusual are we talking? Like, is this a blip on the radar, or should we be hitting the panic button?
Well, last time we saw a losing streak this long, we got to go all the way back to February 1978. So yeah, it's definitely not an everyday thing. Usually it means investors are feeling a bit, unsure about things.
Like the market's holding its breath?
Yeah, something like that. And that can lead to some, shall we say, interesting outcomes. Which brings us back to that 1978 thing.
Right, that historical parallel. That's what really got me hooked.
So after those 9 days in the red back in 78, the Dow bounced back. Big time.
Big time. How big are we talking?
Over the next 3 months, a 14% jump.
Yeah.
And then over 6 months, it surged like 20%.
Wow. Okay. So are we saying history might repeat itself? Like, is the Dow going to rocket up again?
Well, that's the million-dollar question, right? The Motley Fool article seems to think so. They're leaning pretty hard on that 1978 comparison. But you know how it is with investments. There are always two sides to every coin.
Right. The bulls and the bears.
Yeah.
So let's break that down. Starting with, let's say, the optimistic side, the bulls. What's making them feel good about the Dow right now?
Well, those 30 blue chip companies we talked about, that's the heart of the Dow. They've got a history of being pretty resilient. They tend to have consistent earnings, loyal investors. People see them as a safe bet even when things get shaky. Plus, the article mentions this ETF, the SPDR Dow Jones Industrial Average ETF Trust, or DIA. It lets you spread your investment across all 30 of those companies.
So it's like one-stop shopping for the Dow Jones.
Exactly. Easy way to get a piece of the action. And it's got a pretty low expense ratio, just 0.16%. Makes it even more appealing. Now, just to give you an idea of what's in the DIA. As of December 19th, 2024, the top 10 holdings are, we got United Health Group taking up 7.25%, then Goldman Sachs at 6.81%, Microsoft's in there too, 6.39%, Home Depot 5.51%, Salesforce 4.37%, Amgen 4.28%, McDonald's, good old Mickey D's 3.98%, Boeing 3.63%, Visa 3.41%, and Caterpillar 3.38%.
Okay, so a lot of big names in there for sure, but like you said, it's not the whole market. So what about those who are, let's say, a little less bullish? What are the bears saying about the Dow? Why the long faces?
Well, the bears, they're pointing to the Dow's track record, specifically how it's been underperforming compared to the S&P 500 over the past decade.
So even with all those strong companies in the Dow, it hasn't kept up with the rest of the market.
That's what they're saying. Yeah, numbers don't lie. Over the last 10 years, Dow's returned about 151%, which works out to like 9.6% annually. Yeah. Not bad, but the S&P 500, it's up over 200%, so more like 11.6% annually.
That is a pretty big difference.
Right. And the bears say that's partly because of how the Dow is structured, that price-weighted thing we talked about. It means a few high-priced stocks can really sway the whole index, plus only 30 companies, so maybe it doesn't have the same growth potential as something like the S&P 500.
Makes sense. Mm-hmm. So even if we see a rebound, the bears are saying there might be better options out there, especially if you're thinking long-term.
That's the gist of it, yeah. They're also a bit wary of the Dow's valuation right now. They're saying it's a bit pricey compared to how much growth they're expecting, especially compared to the S&P 500.
Okay, so we got this potential rebound,
Mm.
but we also have this history of underperforming. And then there's the valuation question. Seems like a tough call. What do you think? I mean, you've been watching the Dow for a while now.
Well, it's definitely a tricky situation. No easy answers here. It really comes down to what you're trying to achieve with your investments and how much risk you're willing to take on.
Okay, so let's say you're thinking long-term, like planning for retirement. Does this historical pattern with the Dow change the game plan at all?
Well, if we look at the data, the S&P 500 has historically given better returns over longer periods. But that doesn't mean you should write off the Dow completely. Diversification is always a good idea. And the Dow, with those big established companies, it could still be a solid part of a well-rounded portfolio.
Right, so don't put all your eggs in one basket.
Exactly, even if that basket is full of blue-chip eggs.
I like that analogy.
Think of it this way. The Dow could be a piece of your puzzle, but not necessarily the whole picture.
That makes sense.
Right.
But what about someone who's, maybe a bit more adventurous with their investments, someone with a higher risk tolerance, looking for those quick gains? Does this potential rebound, like we saw in '78, make the Dow more appealing to them?
Well, it certainly adds a bit of excitement, doesn't it? If history does repeat itself, there's a chance for some pretty big short-term gains.
Mm.
But, and this is a big but, past performance, it's never a guarantee.
Right, the market's full of surprises.
Exactly.
So it's like a calculated gamble. You're betting on the Dow to bounce back, but knowing it might not be the best long-term strategy.
Yeah, that's a good way to put it. You got to balance those historical trends with, a realistic understanding of how the market actually works.
Right, it's not just about following the hype.
Yep.
Okay, so let's say after all this,
Yeah.
you decide, hey, I want some Dow action. We talked about that DIA ETF. But are there other ways to, get in on the Dow Jones?
Oh, absolutely. You can always invest directly in individual stocks. Pick and choose the companies you like best from the Dow's lineup. It takes a bit more research, you got to stay on top of things, but it gives you more control.
So you can kind of build your own little Dow Jones mini empire.
You got it. And then, for those who prefer a more hands-off approach, there are other Dow-focused ETFs out there. They all have their own pros and cons, fees, that kind of thing.
So DIA, individual stocks,
Mhm.
other Dow ETFs, a lot of options.
Yep.
But no matter what you choose,
You've got to do your homework.
right, really understand those companies.
Absolutely.
So digging into those financial statements, looking at the valuations, getting a feel for the overall market landscape.
All of that, yeah. Knowledge is power, especially when it comes to investing. And hey, we've covered a lot of ground here today. We looked at the Dow's recent performance, that whole historical parallel, the bull case, the bear case. But now we got to figure out, what does all this mean for you? What do you do with this information?
Exactly. How do we connect all this back to our listeners and their own investments?
Well, the big takeaway here is that the Dow Jones, just like any investment, it has its potential rewards, but it also has risks. You got to look at it from both sides. Think about the short term, the long term, and ask yourself, does the chance of a rebound outweigh that history of underperformance? And how does it all fit with your own goals and your risk tolerance?
That's a really good point. It's not just about chasing trends. It's about making choices that make sense for you, for your own financial journey.
Exactly.
This whole deep dive
Yeah.
has really highlighted how important it is to have a plan, a strategy, and to really truly understand what you're investing in.
Couldn't agree more.
It's like we've given you the pieces of the puzzle,
Yep.
but it's up to you to put them together in a way that works for you, for your own financial picture.
Exactly. And as you think about your next move, remember that knowledge is your best friend. The more you understand about the market, about these companies, about what makes them tick, the better prepared you'll be to handle whatever comes your way.
So as we wrap up this deep dive into the Dow Joneses, what's the one thing you hope our listeners take away from all this?
I'd say it's this. The Dow Jones, like any investment, it has a story, it has a past, a present, and a future. And understanding that story, with all its twists and turns, that's the key to making smart decisions.
That's a great way to put it. The Dow's not just a number going up and down. It's a reflection of the whole economy, of how individual companies are doing, of how investors are feeling.
Exactly. And as you keep learning and exploring the world of investing, remember that every choice comes with some level of risk. Do your research, talk to a financial advisor if you need to, but most importantly, invest with confidence and with a clear understanding of your own goals.
Well said. And on that note, We'll wrap up our deep dive into the Dow Jones Industrial Average. We hope you found this exploration informative and, maybe even a little bit fun. Until next time, happy investing, everyone.
It really does, yeah. It's a tough one. There's no magic answer, It all depends on what you're trying to do. Like, what are your goals? And how much risk are you comfortable with?
Okay, so let's say I'm in it for the long haul, thinking about retirement, that kind of thing. Does this whole historical pattern we've been talking about, does it change how I should be thinking about the Dow?
Well, if you look back at the numbers, the S&P 500 has usually done better over longer periods. But that doesn't mean you got to completely ignore the Dow. It's all about diversification, right? Not putting all your eggs in one basket.
Right.
And the Dow, with all those solid, well-established companies, it could still have a place in your portfolio if you're looking for a balanced approach.
No, so not all my eggs in the Dow basket, even if they're blue chip eggs.
Exactly.
I like that.
Think of it like this. The Dow could be one piece of your puzzle, but maybe not the whole picture.
Okay, I get it. But what about someone who's a little more, risk hungry? Maybe looking for those quick wins. Does this potential for a rebound, like we saw in 78, does that make the Dow more tempting for them?
Well, it definitely makes things a bit more interesting, that's for sure. If history does decide to repeat itself, there could be some serious short-term gains to be made. But I'm going to emphasize this. Past performance is not a crystal ball.
Right. The market's always got a few tricks up its sleeve.
You said
so it's kind of like
a
the calculated gamble, right? Betting on that rebound, but knowing it might not be the best long-term play.
Yeah, that's a good way to think about it. You got to weigh those historical trends, but also be realistic about how the market works.
Don't get swept up in the hype.
Exactly.
Okay, so let's say I've done my thinking, and I decide, you know what? I want a piece of the Dow. We talked about the DIA ETF. Are there other ways to get in on the Dow action?
Oh, yeah, for sure. You can always invest directly in the individual companies listed on the Dow. Do your research, pick the ones you believe in.
So I could be my own Dow Jones stock picker.
Yeah, you got it. It takes a bit more work. Got to stay informed. But you have more control that way. And then there's another option for folks who want something a little simpler. There are other Dow-focused ETFs out there. They all have different features, different fees. So, do some digging and see what works best for you.
So DIA, individual stocks, other ETFs. Sounds like we got options.
We do.
But no matter what path you choose,
research is key.
Got to do your homework right.
Absolutely.
Really understand those companies inside and out.
That's right.
So digging into those financial statements, checking out the valuations, and really getting a feel for the overall market, too.
All that good stuff, yeah. Knowledge is power in the investing game. Speaking of which, we've covered a lot of ground today. The Dow's performance, that whole historical parallel, the bulls and the bears, all that. But now comes the important part. What does all this mean for you? How do you actually use this information?
Yeah, that's the key question, right? How do we apply all this to our listeners' own portfolios?
Well, the big takeaway here is this. The Dow Jones, just like any investment, it has the potential to make you money. But there are risks involved. You got to look at both sides of the coin. Think about your short-term goals, your long-term goals, and ask yourself, does the chance of a rebound outweigh the fact that it's historically underperformed? And how does it all fit in with your personal goals and your risk tolerance?
That's a really important point. It's not just about chasing the latest trend. It's about making choices that are right for you, for your own financial journey.
You got it.
I think this whole deep dive has really shown
how
important it is to have a plan, a strategy, and to really understand what you're investing in.
Couldn't have said it better myself.
Like, we've given you all the pieces, but you got to put the puzzle together yourself. In a way that makes sense for your own financial picture.
Exactly. And as you're putting that puzzle together, remember, knowledge is your most valuable tool. The more you understand about the market, about these companies, about what drives them, the better equipped you'll be to navigate the ups and downs.
So true. It really is. Yeah. Like you said earlier, knowledge is power.
Absolutely. This whole deep dive, it's about giving you information, different perspectives, But we're not here to tell you what to do. It's about giving you the tools to make your own decisions.
I like that. Like we're handing you the pieces.
Yeah.
But you get to build your own puzzle.
Yeah.
And make it fit your own, financial picture.
Exactly. And as you're figuring out your next move, keep in mind, the more you know, the better off you'll be. Learn about the market, these companies, what makes them move. That's how you handle those ups and downs.
Makes sense. So as we wrap up our Dow Jones deep dive here, what's the one big thing you hope our listeners walk away with?
I'd say this. The Dow Jones, any investment really, It's got a story to tell. It's got a history, a present, and a future, right? And understanding that story, that's what helps you make good decisions.
Like the Dow's more than just a number. It's telling us something.
Right. It reflects the whole economy, how
Yeah.
companies are performing, even how people are feeling about things.
It's all connected.
It is. And as you keep learning about investing, don't forget there's always some risk involved. Do your research, talk to an advisor if you need to, but most importantly, invest confidently, knowing your goals.
Couldn't have said it better myself. Well, folks, that about wraps it up for our deep dive into the Dow Jones. Hope you found it useful, maybe even a little bit interesting. Until next time, happy investing.